Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the Thirsty Thursday, the August, today, the 8th already? What is it? Today is August the 6th. No, it's only the 6th out there. Edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but much, much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in 877-927-6648. If you can't dial in, we've got you covered there too. Let those fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And of course, in our Tigers Den, well, any ping will do. So let's go ahead and get this show started on Thirsty Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now we got the mixed bag out here. The Dow's up 38, the S&P 2, NASDAQ 100 is up 49 points. The Russell's off 5, the semis are back 11. New York Stock Exchange is off 41 points out here. I'll start with this table versus a chart out here, just to give you a feel for what's going on inside the market. So those of you that listen to the show, you know we pay attention to understanding where support and resistance is. We take a look at, to define support and resistance, we use several different things. We use either our task market profiles. They tell us about what's going on in the state of the game, really at the moment, where buyers and sellers reside, where both buyers and sellers believe within a certain range out there that the instrument is fairly valued at. We then also use our TD9 count, our breakdown and breakout resistance and support levels. Those are very helpful to us. And we take a look at Stevie's red/green line. That's really what, in essence, this table here is representing. That's up on our screen. And so you'll see I've got daily, weekly, 30-minute, 60-minute, 2-hour, 4-hour, 5-hour. And I've even got a timestamp up here. I don't know why the timestamp isn't showing for the ETFs. I could probably change that, but that would probably screw me up too. So here's what I want you to pay attention to. Let's look at the daily column out here, because this helps. If you're trying to understand what are market conditions, first, just with regard to Stevie's green line, when you see it's a slight little up arrow to the left of either SUP or RES, so support or resistance out there. The up arrow tells me whether the line is green or red, because that's really important here. So if we just take a look at the ES Mini, we'll take a look at each of the equity futures, each of the cash indices here, and if you take a look at it, you're going to see all green, all up arrows. All up arrows, same thing here if you take a look at the diamonds, the IWM, the equal weighted ETF, so everything out here. So you've got the arrows to the upside, tells us that oscillator and change line is green. That tells us that the price oscillator, the difference between the 19 to 39-day exponential moving average, is above zero. Now, when it says SUP, support, it tells me that price is above the oscillator and change line, or Stevie's green line, red line value out here. So you've got the ES Mini trading at 33.23, the oscillator and change line at 33.08. There's nothing more bullish than a rising price oscillator, unless the market is making some kind of top or has confirmed some type of top. So this is not going to sell the top tick or buy the bottom tick. But if you're trying to understand what are the market conditions across the board now, we're talking about the S&P, the NASDAQ, the Russell. Well, really, you've got all the indices. You've got the transports. You've got the New York Stock Exchange, the semiconductor index. So even though the semis are up here, or down a little bit, what do we know? We know that price is trading above support, We've got an up arrow on the on Stevie's daily time frame out here, so we know the price oscillator is above zero, or the line color is green out here. And there's support. Price would have to close below 2160 in order for there to be something wrong. So these are the market conditions that are present right now. You have those same levels out here for gold, silver, a number of different instruments. So I thought that would be the place that we would start, just so, because that's going to, what that does is that tells me what's going on inside the marketplace. Now, we want to look further than that, and by looking further than that, I just want to review for you what we took a look at during that opening segment, or the 1 o'clock update. The 1 o'clock update was just simply also taking a look and understand. Now, you and I, we use to help us identify tops and bottoms. They don't always identify tops and bottoms, but when the patterns are present, well, then the hair in the back of your chinny chin, your neck should actually stand up. Why? Because it means that you're about to see a change in trend, or potentially see a change in trend. And that's exactly what took place this morning. I got my newsletter out early because I had some dental work that had to be done. So really just got back into the chair about 10, 15 minutes before the 1 o'clock update out here. And so, but here's the thing. You take a look at a unanimous vote here, because, I was driving, I was listening to Bloomberg, or and they were talking about the some unemployment numbers, and markets started moving lower out there. I didn't, of course, know where I was at inside my TD9 counts out here, but all subscribers knew where we were when the newsletter went out around 7:30 or so out here. But take a look at the unanimous. Take a look at all the eights. These are each of the 4 equity future contracts out here. And so now what you and I are paying attention to is really the NQ, because the NQ has reached bar number 9. So we know that can be a top, just as bar number 8, 9, or the bar following 9 can be a bottom out here. So we're going to watch so if you're looking for signals about what the market is going to do out here, these two tables, or one table and this set of charts here, is very, very helpful to you, extraordinarily helpful. You know that just simply by looking at this, in order to gauge what the market is going to do, you and I just need to really pay attention to the NQ. So, Steve-O, let's pay attention to the NQ. Okay, let's do that. Let me get out to the futures out here, my equity futures. And let me pull over the NQ. So here's again what we're looking at, but only on a larger scale out here. But first thing, where's the key levels of support? Any kind of pullback? Should a TD9 identify some type of top out here? Well, first you've got the top of its 30-minute profile. That's at 11,147. First level of support. Level 2, right around 11,131. I have to say around because that Stevie Green line is going to change. So around the 11,131 level. If price were to close below that, then you've got either 11,108, 11,070, and right at 11,073 is the new breakout level that was formed by this TD9 count. That's where price would need to close below for there to be any kind of signal of a change in trend out here. So it's the NQ that we're going to watch. If we take a look at the ES Mini as an example, in the case of the ES Mini, what we're really keeping an eye on, we don't have a TD9 count up to the at present. We can see that price is dealing with its TD9 breakdown level of 33.22. We haven't seen 2 closes above that. You saw one little spike above it, and then price moved back down. So that's the old one-hit wonder. You and I like to take a look at 2 consecutive closes above or below support, just simply to give us a little bit more higher probability of the outcome of where price is likely headed to. So if at 1:30 the ES Mini closes above 33.2275 and the NQ decides not to top with the NQ TD9 count pattern, well, it's telling you prices want to move higher. That's just what the charts are communicating to you and I. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So let's go. We got a couple of questions here. The first one from Ruby inside the Tiger's Den. Ruby asking the question out here. Steve, the dollar is still holding 92.60, but last night broke support and bounced. Does this change any of my studies from yesterday? So here, this chart here that we're taking a look at is the U.S. dollar compared to cross rates for a number of different currencies. In the upper left, you've got the U.S. dollar index, which is really what Ruby's talking about. You'll see an A to B equals CD, down pattern 92.36 is that price projection out there. So breaking through support, Ruby is probably taking a look at the bottom of its daily profile out here, which is at 92.03. And so, yes, price is below that, but that was a bullish reversal candle out here on July 31st, Ruby, and price needs to get below that. For the U.S. dollar. So let's do this. I'm going to come back to you, Ruby, because we've got a caller on the line and we've got call ahead seating, but we'll come back to the U.S. dollar index. But first, let's go out to Tim in Colorado. Tim, thanks for calling. Thanks for holding. How are you?
Morning, Steve.
How are you?
I'm fine. How about you?
I am very good. Thanks so much for calling. And VGZ is the symbol I believe that you're calling about, Vista Gold. So tell the folks what you're doing and how we can best help you.
I was looking for a stop. I got
Looking
some
for a stop.
position in the
Okay. So when you entered the position, is this a trade? Is this what's your time frame horizon on this?
I had it for about a couple months, but lately has been kind of gaining. So
Well, everything looks really relatively good. So from a market profile standpoint, we use the top of those profiles. That's where sellers reside. And we take a look at our daily, our weekly, and our monthly time frame out here, Tim. Price is above those levels. So it's above resistance. So that's a positive. Now, sometimes old resistance can become new support. So with regard to where is the first support level on a daily time frame for Vista Gold, that's going to be $1.14. And you're at $1.34 right now. So about a 20-cent move to the downside. Now, your average true range over the last 10 days for Vista Gold has been a 10-cent move out here. And so if you were going to consider one way to place a stop, one way would be to take the average true range, 10 cents, multiplied times 1.618. That's a Fibonacci expansion, so that'd be 17 cents out there. I can even do that math. And the stop would have been 17 cents below yesterday's close, which price has not hit out here. Yesterday's close was $1.37. You're at $1.34. So that would be one place to go ahead and place your stop. Another would be below
yesterday's close.
Yesterday's close for Vista Gold was $1.34. $1.37. $1.37. It's trading at $1.34 right now. So that'd be one possibility. So $1.37 minus 17, you're at $1.20. But here's the problem then I would have with using that as the stop. I know that should Vista Gold continue to pull back, that 114, the old daily profile, top of that profile, could become support. So I know where the average true range would have me place a stop, but I also know where there's a level of support. So this is something you're going to have to make a determination on depending on your entry price into this. The other thing that we want to do is understand, are there any kind of topping signals from a daily standpoint inside of Vista Gold? And there's a possibility. So one topping signal, like many of the gold equities, and Vista Gold being one of them, price was moving higher, doing a less relative energy. Now, that's not a problem unless a bearish reversal candle forms. We don't know, Tim, what today's candle is going to be. I can tell you what it is at 122, and it is a bearish reversal dark cloud cover candle. So this is signaling to us that should this be the candle that forms, that price should push its way back to support. Now, another level of support out here is Stevie's green line. That's the oscillator and change line. And on a daily basis, Tim, that's priced at $1.25. So if price closes below $1.25, and we don't know whether it will or not, but if it does, what that signals to you and I is price getting ready to move back to either test that 114 level. It'd be either 114, 101, 92, or 85. Those are all of the different support levels on the way down inside of Vista Gold from a daily time frame. And you and I don't know at this stage whether any of those, well, first, whether they'll get tested or whether they'll hold. So not to confuse you, because I've given you a couple different things to consider here, what questions does that now pose to you?
Well, I subscribe to your newsletter, right?
Okay.
But you mentioned that gold may be topping, right?
Well, it looked that way until I believe 2 days ago out here. So let's go take a look at gold and see what maybe has changed during today's session out here. See if there's anything that has changed. So I'm going to pull up the December contract here for gold. And in the case of gold, so gold did have a topping pattern in play, but 3 trading sessions ago, so this is Thursday, so on Monday, price closed above the resistance level or the top of that topping pattern, and that then told us that gold no longer could maintain that bearish outlook. And so the outlook in the newsletter is actually bullish. And so the price target, the next price objective, is likely around the 2120 area. That would be its 1 to 1.272 A to B equals CD to the upside. Today, it looks like it'll be bar number 5 of a TD9 count. So even if that was going to identify the high, that wouldn't take place until bars 8, 9, or 10. So it's not going to be this week. So the daily chart right now for gold says that it wants to move higher. I realize that mining equities are pulling back a bit. And but I don't have on a daily time frame, I don't have a topping pattern for gold. And ideally you would see that because here on the weekly, so the beauty of the setup here is here's our weekly chart for gold, and this is going to be bar number 8 this week, or should be. It's only Thursday, but I don't see gold, getting below $1,800 by tomorrow. You're at 2070. If it does, man, there's some major issues going on. So this is going to form a TD, bar number 8 of a TD9 count. Next week would be the confirmation of that pattern out here. But again, gold would have to trade below about 1820 or so in order to negate the pattern. So because on the weekly we've got a TD9 count pattern setting up, and the daily has one too, I would say we're at least 3 to 5 trading sessions away from there possibly being a top inside of gold. That's the setup as of 1:25 in the afternoon.
So for now, if I put a 1 and 114 for the stop for VGZ, be okay, right?
Yeah, I would put it below 114. So I'd give it at least a few pennies below that. Say, as long as it doesn't get in the way of, I don't want you to lose money on this trade here. If you're already in the money, I would put it probably at 109.
109.
I would probably,
because I did sell some position when it was about $1.25. I still have some half a holding left.
Okay.
Yep.
Yeah, if 109 doesn't hurt you, and the reason that where 109 is coming from is that it's below the low of July 30th, which was a test and a rejection of the top of that profile out there. So I just went 1 penny below that. That would be my thinking right now.
Okay. The other thing I was to ask you, right, on your newsletter, you've been saying that this market, they retest the March low, right?
Yes.
Was this going to happen?
Well, I still believe that it will. And it's really the Dow and the Russell 2000 that we're talking about. Tim, if you want, you can stay on through this break. We're about to go to a hard break. If not, no problem. But
well, if not, let me do this, okay? You go on break. I don't know if you remember, I met you when you came out with Tom for some classes out here.
Hey,
like
we're at a hard break. We're at a hard break right now. Just hang on.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're on the line with Tim in Colorado. And so, Tim, I'm sorry, I didn't mean to cut you off there. We were just going to a hard break.
You're fine.
And so we met in Colorado when Tom and I did that little tour of the West Coast years back.
That's right. That was like at least 10 years ago, when he came up with that, Tom.
Yeah,
Mm-hmm.
it was. It's amazing how quickly time flies. Especially
that was when you and Tom still had that gold company where you were buying gold?
Yes, absolutely.
Yeah.
Tiger Metal Machines, yeah. Oh, that's
I just
great.
want to know how much I appreciate your technical reading, right?
Well, thank you.
So I'm kind of waiting for you to short this market.
Well, we're not doing it today. That's for sure.
I know.
And the real key is going to be really does key levels of support break. And so, when you and I were taking a look at Vista Gold, that's really what our focus was trying to understand where support was at, or really, we could have taken it another step further, which was try to figure out what the reward risk is in staying in the trade, right now. And so in order to do that, we'd have to come up with some type of projection. And so on that projection, I'd use like an A to B equals CD pattern, for example. So this is the weekly chart for Vista Gold, and the A point I would use here is the low from March 9th, 2020. And the B point that I would be using is the high from June 1st, 2020, and the C point looks like it's the week of June 29th. So what we can see here in Vista Gold, Tim, is that it's already hit this week, by the way. It hit the 1-to-1 A to B equals CD price projection of $1.44. Now, because we know that we've got an A to B equals CD, it makes that daily chart and that daily bearish reversal candle even more important, and those levels of support that we took a look at inside of Vista Gold. Now, not that this can't go higher, but the next price projection level for you would be $1.61. So you're at $1.34. So you'd kind of do the math right now. What's the difference between $1.61 and $1.34 versus your stop? And does that make sense for you to stay in the trade? Now, all we can do is do the analysis, the risk-reward analysis, where our stops, and then make the decision that's going to best accommodate our trading philosophy, our emotional makeup, all those types of things. It's kind of like it's really like the long coffee trade that we're in. And so coffee has pulled back to test its breakout level of support. Our stop is below that area. I'm going to try to update a chart here so I can show this to you, because it's really the same decision-making process. So you can imagine I was gone. I was at the dentist all morning, and when I came back, the very first thing that I wanted to look at was, hey, where is coffee trading into on its 30-minute time frame? Has it broken through a key level of support? And the answer was, at least at that stage, it had not, and it was just pulling back to that area. So when instruments just pull back to support, that's not a reason to exit the position. If a level of support gets broken, well, then obviously we've got something else to consider. So this 30-minute chart here we go. So if I take a look at, here's the 30-minute chart here for coffee. And folks, so you can see this is what Tim and I are doing here in trying to analyze Vista Gold. It's the same process I go through for everything. Here is the 30-minute time frame for the September coffee futures contract. And what we can see is 117.15 is its breakout support level, which is exactly where price is pulled back to. If price closes below that, well, then we've got some other thing to consider. But right now, I'm not willing to exit this position. We've had a nice profit. If support gets broken, I'll
like $5.
Yeah. So same process. It's just being able to identify support and resistance, and then take action if either side gets broken. Okay.
Yeah, I'll go put that stop at 109 or something.
109. I think that's the right place inside of Vista Gold.
I just want to let you know how much I appreciate your technical reading, and you're waiting for this reverse candle before we short this general market, right?
Well, thank you. Appreciate that.
Okay. All right.
You bet. Have a good day, and thanks so much for calling.
All right.
You bet. That was Tim in Colorado. So David H. Well, you know what? We'll go to David's question next because I wanted to come back to the U.S. dollar index for Ruby because, David, I can't have you cut in front of Ruby out here. So Ruby was asking me about the U.S. dollar. Now, Ruby, what I put up on my screen is the continuous contract right now. And the reason is because this way you and I can take a look at the larger time frame out here. We can take a listen to the quarterly chart as an example. And on the quarterly chart for the U.S. dollar index, we can see that the quarter that ended June was a confirmation of a Rhodes momentum indicator top. And right now, price is trading below the bottom of its daily profile, 93.74. So now, of course, it's a quarter, so it's a 3-month time period out here. So we've got until September 30th, a long way away to know whether or not price is going to close above or below that 93.74 level out here. But it is supporting a lower price. Doesn't say it's the end of the world out here for the dollar. If we take a look at the monthly time frame chart and we update it, this formed with wave number 7. That's letter G on my screen out here. But here, Ruby, a price would need to close below 91.59. So 91.59 is the area that I would be watching, or you should be watching, because if price on a monthly basis closes below that, then the dollar has a problem and wants lower price. Lower price on a monthly basis could say 79. I'm not making that call. We should make that call because 91.59 is the first place for us to see what the U.S. dollar index is going to do. If we switch over to a weekly time frame, we can see that price is below its TD9 breakout level of 94.47. You're in on a weekly basis, bar number 5 of a TD9 count. So that's not any threat of identifying the bottom. So the next level of support on a weekly basis for the U.S. dollar index is 88.94. It's the breakout level. It is that simple. So now we take a look at the daily time frame. On the daily time frame, we were showing the A to B equals CD pattern on my other chart out here. And as I mentioned, this was a bullish engulfing candle on July 31st. And that low out there is 92.51. 92.51 is really where price needs to close below, Ruby, in order to suggest those lower prices that we looked at for those larger time frames. So you have a confirmed. This is a butterfly pattern. Can't draw it in here on this white background chart. You also have a bar number 8 of a TD9 count. So that says, and we don't have a lower low just yet, but if we were to get that tomorrow, well, guess what, Ruby? If we could see a bottom pattern on the U.S. dollar index, again, this is the continuous one that I've got up on my screen up here, but the key number that I was trying to get across to you yesterday and will get across to you today is Stevie's red line. Whether there's a bottom, such as the one that formed out here, the A to B equals CD pattern, price must close above Stevie's red line. 2 sessions in a row to be specific, and that's right at about the 93.28 level as we speak right now. So price is going to, and you can see how Stevie's red line has really acted as a resistance area. That's why you'd need to see that. If we did get that, and then it closed above 94.09, then the message is price would travel up to 96.67. So really the U.S. dollar index, it could bottom, and that signal would really be by Monday, because today's bar number 8, tomorrow will be bar number 9, and the bar following 9 could identify that bottom out there. So I'd say pay attention to the U.S. dollar index for the next couple of days out there, Ruby. So I hope that helps you out. We do have a caller on the line. We'll go to him after we get back from this break, just simply because we've got about 10 seconds to go. David H was asking about ticker symbol. Let me just see if I can get it up here real quick. It's WMB, that is Williams and Companies out here. And just before we go to break, price is trading above the top of its daily and its weekly profile and in between its monthly profile, suggesting that maybe what price wants to do is make a move up to 24.32. We'll be back with Gary in Michigan, and we'll take a look at both gold and silver.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So let's go out to a fellow Michigander out here, Gary in New Buffalo. Gary, thanks for calling. Thanks for holding. Thanks for waiting through that break. How are you?
Hey, Steve.
Oh, there we go. We got you.
Can you hear me okay?
I can hear you just fine now. Thanks. So you want to take a look at gold and silver. Tell us how I can help you.
Well, you did a great job on gold. I got that. And if you haven't looked at silver, great. But I was also looking for your perspective on the fact that I've got some general ideas, but they're probably wrong. But why the miners are pulling back when gold's going so high, which is okay because I took money off the table last week, in silver, especially on the silver stuff. But I'm curious your perspective on that as well as the silver overview.
Yeah, so I don't. So with regard to the latter, I'm in your same camp. I don't have any conclusions that I can draw or any reasons that I could give to you. Just that each trade similarly directionally, but not each and every day necessarily. And so we can go look at we only looked at one gold stock today, I believe, Vista Gold. So we'd go take a look at the GDX and the XAU. But let's first take care of silver for you. So we went through gold. And so in the case of silver, right now I show silver wanting to make its next price target of its A to B equals CD pattern, which is 28.95. You're at 28.39 right now. Above that would be about 31.70 or so. As I pull over the daily time frame for silver, there's actually nothing that suggests that won't be the outcome right now. Price is moving higher. It's finally doing it with energy. So there's no Rhodes momentum indicator top out here. Price is well above its green line. That's at 25.51. So that's bullish. Bar number 4 of a TD9 count So the only thing that could derail silver would be some type of bearish reversal candle, in which case then that would generate a sell the D point of the A to B equals CD pattern out here. I don't know whether that will happen or not. I just can share with you as a 144. That's not what we're looking at out here. And so this suggests to me that silver wants to continue its run higher with its next price target, being in this 28.95-ish type area out there. And even on the short-term time frame chart here for silver, as I pull over the 30-minute just to see if there's anything going on intra-session, and there it really isn't out here. 27.72 is its key level of support. If there were to be a pullback, price would need to break through that to say, okay, maybe there's something wrong here. So that's what I see when I take a look at silver. Any questions about silver before we would move on to, say, the XAU or the GDX?
Yeah, I do. So two things. I would like your perspective. What was the number? You just gave that last number as far as the low-end number on silver. I missed it.
Sure. So that would be the 30-minute time frame. So let's just say that let me pull that chart back out here. Let's say for some reason, who knows what, all of a sudden there's huge selling that comes into silver. The question would be, on a short-term time frame, and for me, the shortest-term time frame that I want to use to make maybe a decision, not maybe, but to make a decision, would be the 30-minute time frame. And the TD9 breakout level on this is 27.20. We would need to, if any instrument is going to have a change in trend, it's the short-term time frame charts that will first see the levels of support break. If they don't break, it's just price pulling back to a breakout level, which is normal, which is where you want to enter into a position. So in the case of silver on a 30-minute time frame, let's say somebody took the position to go short, you'd be looking to cover that short at 27.72 out there, at least really tighten up the stop. So that's the first level of support.
Got it. Two other questions on silver. One is the fact that they're typically when, from what you've taught me and Larry, if the shorts have covered, typically that's not a good sign. But in this case, what I was listening to last night is there's this whole thing about some of these big boys having to cover the shorts. And number one, if you have a perspective on that, if there is not a lot of shorts, if that's not a good thing or good thing. And the other perspective was, do you think that the dollar breaks and starts heading up? Do you think now this correlation where the dollar and metals go back to their old perspective, where the metals go down if the dollar goes up?
Well, boy, lots of questions there. Let's see. So with regard to shorts, is it a good thing when prices are moving higher, you want to have shorts in there because they're natural buyers on the way down, covering a profitable position as an example. So when there's no shorts, you can get a huge rug pull to the downside. So that'd be one thing. In a market where people are looking for liquidity, it doesn't matter whether there's longs or shorts out there. People are going to just simply start selling what they can out here. I think with regard to gold and silver, we have to remember that it's really a commodity out here. It's not a currency that you or I use. If we go to the store to buy gas or so forth out here, what else can I say about silver and gold? It's important to understand what's going on internationally for instruments like this. The chatter over in Europe, as an example, and in China, Gary, is that they've got things set up to move to a full digital currency. So in China, they want to get rid of the yuan, the paper version, and the reason they want to do that is because they want to track every single transaction. Every single penny, so they can go ahead and pull in what they want. The same thing is going on over in Europe right now. The European Union has things in place, getting ready to release the e-euro. This is the whole reason why I have shared many times on this show here that if you're somebody that's in Bitcoin, any of those digital currencies, be careful, because at some point in time, when the governments do change over to those digital currencies, they're going to put a real hankering on those on the existing digital currencies that are out there. They're not going to let them compete to be able to be used as cash or what have you. So there's a lot of things that are going on. I'd say, Gary, that all of the fundamental things that you and I could talk about, have a discussion about, to a certain extent doesn't really matter, because we can just really understand the patterns that are out here, and just simply understanding levels of support and resistance out here. And when levels of support get broken for whatever the reason might be, then being long is not a great thing, and you're looking for your next level of support. On a daily basis, the key level of support for silver would be 25.52 right now. You need to see price close below that, for there to be any kind of warning shot that price might pull back to 1965 as an example. So there are a lot of those other fundamental things that are out there, but and I hate using this expression, but at the end of the trading sessions out here, you and I just need to rely on what buyers and sellers are telling us. Where's support? Where's resistance? What are the patterns that are in play? And then we don't have to necessarily worry about, those other things that are out there that are going on, and whether or not I'm even right about that stuff. But I believe I am.
I believe so too.
All right. So hey, we're going to a break here, and we only got 2 minutes when we get back here. So what I'll do is let's say goodbye right now. But I'll take a look at the GDX for you just to get a feel for the mining equities. Okay?
If you want. Thank you very much, and be well.
You bet. Take care. We'll be right back, folks.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
folks. So if we take a look at the GDX or the XAU, we're going to see basically the same thing right now. The GDX trade out at 43.80. Stevie's green line is just a penny or two above that at 43.82, let's say 83 out there. So price right now is just testing its first level of support. I don't have a bearish reversal candle, no matter what. So if price does close below Stevie's green line, what you would expect is a pullback to 42.24. That's the top of its daily profile. 41.17 as it did before, and that was the center of its profile, or 40.09. That's the bottom. And anything below that would be 38.34. What we know about both the GDX and the XAU right now is they're both testing Stevie's green line. If they close back above it, then price will have rejected a key level of support out there. I want to go back to the question that David had asked, and he was asking about an A to B equals CD pattern. David, the A to B equals CD pattern, just because I don't have a ton of time out here, the one that you really should be looking at that may have set up, because you were talking about a 0.382 retracement. Here on the weekly, I'm going to show it to you on the weekly. You start with your A point down here the week of March 16th at 841. The B point is going to be the week of June 8th. And then that retracement back to the bottom of its TAS daily profile was about a 0.382. It was really 31.31% out there. Price has failed this week to get above 2161, but if it does, and it does it with volume, the volume there was 54 million shares. You're at 37 million shares as we speak right now. That would give you an A to B equals CD set up to the upside of 3068. Now, if we take a look at the daily time frame here, the caution is that a prior swing point, June 8th, had 11.3 million shares, was tested and rejected yesterday with 8.9 million shares. That is on again, this is WMB that we're talking about out here. So this, in fact, may pull back. And may pull back to about the 1828 to 1943 level. You were asking where Stevie's green line was as well. So before we end that show, or our show today, that level out here, David, is $20.13. For all of you other folks that sent me an email and I didn't get to your request out there, I'll make sure that we get to them tomorrow during the first segment of the show, first and second segment. So thanks so much for writing in. Thanks so much for being here. Stay tuned for 2 more great hours. Have a thirsty Thursday, and I'll see you on Fantastic Friday. Take care, folks.